It's Blandon here from iRefi Mortgages. Today I was reading the Property Investor magazine. There was a very interesting deal called the Masterton Masterclass, and I thought I'll break down the numbers on how I would finance this deal. Now, disclaimer, this is not how Trish and Cal did it, but if I did it like this, I am sure he could pull out all his equity. So it would have been a no money down deal. And to break down what a no money down deal is, basically if you were to go in on a deal and you put up maybe say 70,000 deposit and you borrow the rest of the money, after you finish your renovations, you revalue the property, you could pull out the full 70,000 deposit. And what you'll have is a cash flow positive property in the end, and you didn't put a single cent in. You basically pull out all your equity. The only downtime that you have is probably the time value of money, which is the several months that you have on the property before you can pull out the money. So Masterton Masterclass, this is a very, very good deal. Trish and Kale did really, really well. They bought this mortgagee sale well under value at around 240,000. You can see the before and after. They redid the kitchen. This was probably the most they spent. They did $5,000 worth of renovations and spent 4 months to do it part-time themselves. So for a normal person, I would say, if you don't have the time, you probably got to spend a bit more than 5,000. So they did really well. This is very good. A bit of plastering as well as just ripping out the carpet. And they found there was remove flooring board, very much, kind of like my first property that I renovated. We pulled the carpet out and there was very nice remove flooring at the bottom, which works really well. They just left it sort of with the remove flooring. So you can see here, purchase price 240,000. The current value is 340, 385. You can straight away tell it's cash flow positive. Cost of renovations around 5,000. So I've got the house before as well. So this is the house there, and you can see it's kind of old, needs some LTC. It was really, really ugly bathroom. They really need to repaint this, and this kitchen is messed up. But yeah, this was a really, really good do-up property. So if we were to break down the figures and how I would finance this deal to make it no money down, I would utilize a second tier lender. So basically 120 square meter floor area, they bought at $2,000 per square meter. So for someone in Auckland, this is crazy because this is how much minimum we would spend to build a property, and that's not counting the land. So in Masterton, you're buying the land and the house for $2,000 per square meter, which is very, very solid. So purchase price, 240,000. If for a normal person renovated themselves, they probably spend around 15,000 to do that kind of work. And the valuation after renovations around 340. So there's a 33% increase in margin, which is pretty solid. This is a very, very useful figure if you're trying to figure out whether or not you can pull out your equity. So let's have a look. If we accounted for the cash that's required during renovations, I would say 4 months to do your renovations and maybe another 4 months before you refinance. So in the magazine, they stated they use 4 months, but I would say maybe if you got someone else, tradies, to do it, maybe it would be shorter. So I would probably just say maybe 6 months before you could refinance. So council rate, I checked out the website, it's around $170 per month. Insurance, $100. And interest repayment during this time, because we're on a second tier lender, would be at 8%. So the financing cost and the legal costs, I didn't actually add in the legal cost, so it might be more like 4,500. So down payment with the second tier lender would be 20%, which is 48,000. Loan amount 192, and then you got improvement costs about 15,000 if you were to get tradies to do it. Altogether, cash needed up front, where to acquire this property is 67,500. So this is the very, very important figure. That's the cash that we need up front. Now, 6 months later, what we're going to do is we're going to refinance this property. And if we refinance to a main bank, we're going to revalue before we actually do it. So refinance, revalue, it's going to cost us probably 2,500. And because you got $1,000 for the legal costs, you got $1,000 for the registered valuation, as well as $500 for the top up with the second tier lender. We will top up to 272,000. So the key thing here to look at is in the beginning, we borrowed 192,000 on this deal, 80%. And after we renovate and revalue, we top it up to 80% on the 340,000, which would allow us to borrow 272. So the difference between this is what you can draw out as a deposit. So you put down 67,500, you pull out 70,000, so you're cycling 100% of your equity. So let's fix that at ASB for 4.39%, which is pretty solid. You can fix it for 3 years at the moment, which is a pretty solid rate. And you're going to get a cashback as well. Maybe, let's just say 1,500, be conservative. Now, cash flow wise, this property is pretty solid. If you look at the weekly rent in the magazine, the stated was 385. Vacancy rate, say 5%. If you got mortgage repayment on 4.39, interest only, about 12,000 a year. Insurance rates, management fee at 7%, and then just putting aside $1,000 for maintenance, your cash flow is positive 1,500. So basically, if I was to sum it up, this is totally masterclass, because we pull out all of our equity, we left no money in there, and we left with a property that gives us 1,500 per year, which is a very solid deal. So if we look at the cash flow metric, because we pull out all of the deposit, we're making 1,500. The cash on cash return is infinite. If you want to look at more about cash on cash return, and also if you want to learn more about how the no money down deal works, you can definitely check out a couple of the videos in iRefi Nation. And yeah, got a couple of posts up there in there as well. So overall, 7.36 on the mortgage coverage. If you haven't seen the infinite borrowing capacity video, 11% is what we're aiming for. So 7.36 means that we're still pretty strong in terms of borrowing capacity. We won't be hurt too much in terms of cash flow. So if you look at the capital gains as well, I mean, I'm not too sure what the Masterton sort of cap gain. So I think I'm probably going to leave this out. But overall, cash flow and equity, this is a very, very solid deal. And yeah, there you have it. If you guys enjoy this, definitely leave a comment below. And yeah, message me on Facebook if you feel this is valuable and I can do more of these kind of deal analysis. Talk soon.